Everybody, we're just going to give folks a chance to log in. We're going to be going live here in 1 minute. Yeah, all right. Put my camera. Jen is like, you got to talk. You're gonna get cut off. We just wanted to give folks a chance to log in. I don't know the idiosyncrasies of modern technology. Yeah, a lot to talk about this morning, not the least of which is going to be our CPI report, the highlight of the day here in a minute. So we're about ready to go live here. All right. Stop texting me, Jen. A lot to talk about in the overnight, by the way. What I'll do is I'm going to start easy just to kind of make sure folks are getting in here. One thing I don't like about this is I could never really see who's in here. I hate that. We got to figure that out. Or maybe we can and I just can't see it. But anyway, I'm going to share my screen here. Look at the eyeball. The eyeball doesn't tell me everybody, but that's okay. So first thing we'll talk about here, just to sort of start easy, is the price of Bitcoin. Look at this one month chart. We got back over 80,000. I mean, gosh, look where we were in January, almost 100K. We're sitting at 61,000 and well through support, which was in the 65, 66, 67,000 range. What exactly does that mean? Great question. I think that we could kind of explore on a different day. But nonetheless, I think noteworthy, right? As we see a shifting in where money is being allocated, as some might call a rotation. Let's take a look at what happened overnight on our economic calendar. As you could see here, this is prior month, some negative revisions, some big month-over-month drops pretty much across the board. A little hot inflation here. Definitely don't like that. Globally, inflation was seemingly starting to cool a little bit. This newest batch of data, not super bond friendly. Here in Czechoslovakia, we were on the screws. A little bit of a miss. So mixed. Mortgage apps rebounded a bit last week, both refis and purchases. And I would say inflation data overnight was mixed, generally still trending in the right direction. While we approach this CPI report here, I want to take a look at some historical. Let's just look at the world markets here real quick. Overnight, stocks generally off. Indicating here onshore worse. NASDAQ indicating down 1.5. So really the worst of it. Volatility up big time. And as you can imagine, and if you want to know why, some fresh strikes. We had a helicopter down. We retaliated. Sort of in-kind retaliation. So not necessarily escalating the conflict, but definitely some noise in the Middle East overnight. So what do you see? You see higher gas and oil prices, commodities down, dollar stronger versus most indices. Let's take a look at a little bit of a precursor to this CPI report, right? This is a chart that I've looked at and I've actually posted in the past, okay? This gives you the average price of things that are in the CPI bucket for 20 years. And, as I've said in the past, sort of figures lie and liars figure. And I don't mean that in a nefarious way. I mean that you can sort of take numbers and interpret them however you want. One of the things that I've been careful about in this industry, because we get hung up on basis points and margins and things like that and comp, you can't spend percentages, okay? Would I rather have 100% of a $100 basket, right? Or 0.0001% of a quadrillion, trillion, billion, cadillion dollar basket, right? And my point of that is sort of this. When we talk about how hot inflation is, right? Well, first things first, let's look at bananas. And I'm not saying that bananas are the end all be all of inflation, but August '08, bananas were at 63 cents a pound. Today, they're at 66. Okay. Yesterday they were at 67. A year ago, they were at 65. Is that inflation? Actually, the answer is absolutely not. 20 years, 1 cent out of 65. I don't even know what that percentage is. Not a lot. That's really not inflation. Okay. We look at the price of utility, piped utility. Well, $1.58 in June of 2008, $1.70 now. Maybe not inflation, right? $1.05 March 18, inflation. Do you see where I'm kind of going with this, right? This is not what could you better afford in this conversation? Oh my gosh, CPI came out. Hold on. I'm getting so in the weeds. Where are we here? Ooh, I see green. Core on the screws at 2.9. Monthly core 0.2 on an expected 0.3, down from 0.4. Great. Headline 0.5 on the screws, down month over month. Headline 4.2 on the screws, up from 3.8 month over month. We're going to care about the monthly. MBS tightening to Treasury. Losses being moderated. I don't see this as trumping, no pun intended, the Iran news or whatever news we may still get for the remainder of the day. But as I've talked about, we're sort of fighting two narratives here. Data, Iran, okay? And Iran will absolutely dominate the trade. However, the data will either support or contradict, depending on what the data point is and what given day you're looking at. The data and I touched on this, I think, yesterday. For a while, the data was becoming increasingly bond unfriendly. Over the last 2, 3, 4 weeks, the data is becoming increasingly bond friendly. Not in a, hey, let's celebrate way, but sort of let's take a deep breath, sort of a demonstrative reversal, not even a flattening, but some reversal of this very troubling upward trend in terms of the strength of jobs or the strength of prices. I won't say inflation or some of these other indices. So on an underlying basis, the market is going to take a deep breath on this number. But we don't love it, right? So this rally has already lost a little bit of steam. The first bunch of ticks were green. We're going to dive into this report here in a second. But let me just continue on this narrative here, okay? What was more affordable, right? Piped gas at, where are we? At whatever this is, I can't get to it, but it was like $1.50, right? In 2008 dollars, or $1.61 in 2025, $26, right? Look at the price of oranges. For all intents and purposes, hasn't gone anywhere in years. Eggs, incredibly volatile. Here's my problem with measuring eggs, okay? And where I go back to the thought of percentages, right? These numbers are going to tremendously influence CPI. Yeah, there's weighting in there. Don't get me wrong. I'm oversimplifying for a second. But if you told me, would I rather the price of my car double or the price of eggs double? Well, if I'm selling my car, I'd rather the price of the car double. But if I'm buying, I'd rather the price of eggs double. That's more affordable. And these are some of the things that, particularly in this cycle where you have all this contradicting data, and you have a scenario whereby even one of the things we were looking at was small business optimism, and I forget, somebody posted something about it. Maybe it was Russell, but I think it was, pretty intuitive. Like, well, wait a second. We're saying that the employment situation is great, yet small businesses are saying, hey, we haven't felt this bad about our business in 2 years. How is that possible? Well, these are the things that when you're trying to educate yourself about the financial markets, or in my case, trying to do a job within the financial markets, these are the things that you're looking at, not the headline number. It's too late, right? We needed to trade that headline number yesterday and the weeks prior, and then maybe react to it when it prints. But these are the things that allow us to make the calls that we're trying to make. Gasoline, again, volatile. Before this period, I don't know I could say this definitively, but certainly somewhere around the 20-year trend, maybe slightly below, dare I say. Milk has been somewhat problematic. That being said, $4.05 a gallon versus $3.80 during the financial crisis. I just, and then I want to talk about beef here for a second. I just am not digesting inflation the way I think the greater market is. I think that there's a lack of context. We saw 20 odd years of stagnant wage growth, okay? And that was largely what drove 20 years of stagnant prices, okay? Over the last 5 years, we've seen a tremendous amount of money put into the money supply, and we've seen some significant wage growth. And yes, versus 5 years ago, 7 years ago, in certain buckets, we may have seen tremendous price increases. I don't know across everything. I know the price to go out and eat in a restaurant has gone up dramatically. I also know that the average household goes out to dinner by several orders of magnitude greater than they did 30 years ago. So what does that mean? I would argue that the price of things, generally speaking, were more unaffordable in the 70s and 80s than they are today, relative to income. I think that our consumption habits are more problematic than the price of things. That is simply, pork's not in there, Frank, but we can do that. I want to get to the raw CPI report. And this is where it's not just enough. If you're managing an interest rate position, or you're advising on lock float considerations, I don't think it's enough to just say, hey, inflation is this, or jobs are that. All right, let's break down this CPI report as we begin to wind down here. Just in the language here, energy accounted for 36% of all increases. Index for shelter also increased, rising 0.3. Food 0.2. Food at home 0.1. So let's look at this breakdown. All items on a 3-month basis began to the pressure began to abate a bit. 0.9, 0.6, 0.5, that matters, right? 0.5 still an untenable level, but we're heading in the right direction. Food at home, after kind of, I don't know if surprise is the right word, an unwelcomed big jump from 0 to 0.5. We saw that normalize a little bit. Same with food away from home. Now, what might that be? That could be businesses absorbing the increase, right? All of a sudden, you have empty tables. We have to do something. Food away from home popped just a little bit, but kind of in line. And down big over December. Now, it might surprise you to find out that prices to eat out in December were high. Again, some of this is it a real event, or is there something behind it, like Christmas, like the holidays, like the summer, like an unseasonably warm summer, an unseasonably cold winter, that will drive people to do things that they must do, not that they want to do. And those things are transitory in nature, and that we've got to read between the lines on. Energy up, oil down, energy services down, piped down for the third consecutive month. And this is the important one. Less food and energy, so-called core, sort of in a good spot. Annualized, that's a 2.4 annualized core, right? So we like where we're going with that. Commodities actually saw deflation on a monthly basis, as did new vehicles. Used vehicles, which I look at as, a little bit of a barometer of the consumer, right? Are you willing to bid up the price of something that doesn't necessarily, new cars have an MSRP. That's at least a guide. Used cars you make up the price theoretically, and it's based on pure, price discovery in the market. So, the fact that we're still at 0.1 and we're down on an annual basis, to me, speaks a bit to the consumer. Apparel costs, subsided a bit. That's been problematic, 4.8% for the year. So are we reversing that 4-month trend? And again, was this the buildup to the summer? Medical care commodities down. Shelter, and I talked about how I thought shelter might ease up. 0.3, still a big number, better than 0.5. Or I'm sorry, 0.3 better than 0.6. Services, which have been a holdout, better, and transportation negative. So I like these internals, generally speaking. Dairy fell, as did meats, poultry, fish, and eggs. Yeah, I think this is a good report. I think it's a good report, and I don't think we can poke a ton of holes in it, to be honest with you. I think that this is, you could breathe a bit of a sigh of relief. This was sort of the one report, while I myself, personally not a fan. I think that this is the report that the market was going to hang on. So long story short, I think that your float bias on a go-forward basis until the next round of data, can maybe move slightly more float bias. I think we dodged a bullet today. I think PPI matters tomorrow, but, at the end of the day, I think claims matter more. And then sentiment on Friday. If I look at the stack, 6.25 and up, are certainly for June, for me, 70-80% lock, 5.5 coupon, 5 3/4, 6 1/8, maybe a 50-50 proposition. We've had a nice bounce in fives. We're about 10-11 ticks better than the worst levels. So, if you floated on my say so today, now it depends on what bucket you're in. You're 30 basis points better. If it's a new app, you're maybe even 50 basis points better than last week's close, maybe an eighth in rate. You probably take that profit. You tell that good story and you take that profit. If you're offside, you're still offside. Maybe you continue to let that float. So that's how I see it. Thanks for joining live, and thanks for everybody that's going to watch this on replay. If anything happens today, I'll drop something in the chat. Bulls and Bears make money. Pigs get slaughtered. Have a great day.